The Bitcoin's CME futures gap got closed and we have liquidated in the process nearly $300 million. What's gonna happen next? I'll reveal to you in this video. Hello ladies and gentlemen, this is Simon from Maker to Paradise, and in the video of 3 days ago, you remember we have been expecting that with the highest probability we will revisit this support zone. As you can see, we are at that support zone right now. We have dropped by around 8%. With ParadiseTeam VIPs, we have taken this opportunity and transformed it into profits, as you can see on Ethereum for example, or altcoins Sand that we have been shorting. But the important question right now remains, what's gonna happen next? So first of all, for that to say once again with the highest possible probability, we need to take a look at this newly created impulse and understand if this is the impulse of a corrective expanded flat pattern, or is this actually an impulse of some other pattern. Let me show you what I'm talking about. If it's a descending flat correction, we will indeed go as high as $93,000 towards this level before moving towards $44,000. However, if this newly created impulse is actually a first wave of the higher degree, fifth wave of our descending leading diagonal pattern, and yeah, I'm bringing it back and I will explain to you why just in a minute. So if we are actually creating a new impulse in this formation, that would mean that we will not be able to reach $93,000 but only around $87,000 before retesting this major high time frame demand zone. So I will be talking about that. We will try to understand what is going to come with a higher probability, this kind of a retest and then down towards $72,000, or this kind of retest and then down towards $44,000. So for that, let's start with our deep analysis, and to make sure that we are having a better edge than other traders, we will start as high as weekly time frame to analyze the market. So I will not be going that much into the details on ultra high time frame chart. For that, go and watch the previous two videos where we have been really digging deep into the price action on a weekly time frame, just to remind ourselves the basics. After we have been accumulating Bitcoin at $19,500, we have been riding this 5 waves impulse at around $109,000. We have determined that this is the top. We have sold everything and we have started a new trading strategy that is aggressively bearish. And I told you in January that the main targets we are looking for in this downtrend are firstly $77,000 and then $44,000. $77,000 already hit, and right now we are trying to unfold how this correction will develop. So let's zoom into the current market price. As you can see, we are right now below the orange moving average trend line. We have just retested that with this wick out, and we are also below our important 1.272 Fibonacci retracement level, $85,000, ladies and gentlemen. And now it's really important to see how the weekly candle closes. Okay, so it's closing in 1 day 8 hours, and if we close below $85,000, it will mean that with the highest probability we are probably still in the A wave of our zigzag correction. Yeah, what I'm talking about is a zigzag corrective wave structure. If you understand Elliott Wave theory, you know exactly what I'm talking about. After any impulse, we are always having a corrective mode structure, right? And I do believe that from that $19,500 to $109,000, we have had a strong impulse and we are about to have a simple zigzag correction. It can also be any other corrective mode pattern. However, after any significant impulses, sharp corrections like zigzag or double or triple zigzag are the most common ones, alright? So if we go closer and understand the zigzag corrective mode pattern, we know that we are having the A wave in a motive mode pattern, B wave in a corrective mode, and C wave once again in a motive mode, right? So the A wave can actually unfold in an impulse itself, or it can be a leading diagonal. And in the previous videos, we have already concluded that this probably was not a leading diagonal but an impulse, and it had truncated liquidated fifth wave. However, based on the last 2 days, how the price action unfolded, we actually can very nicely count the waves in this contracting triangle, and it can actually be fourth wave of the fifth higher degree wave, and this newly created lower degree impulse can be a first wave of this fifth wave, motive mode wave, and take us towards $72,000, ladies and gentlemen. But we cannot say it for certain at the moment. We will need to wait for the daily candle to close and for the weekly candle to close as well for confirmations. So let's continue with the analysis. If this weekly candle closes below $85,000, it will increase the probabilities that indeed we are about to continue towards $72,000, and then we will conclude and finish this first wave of the zigzag. Then we will have the B wave, and then we will have the C wave towards $44,000. However, if this weekly candle will be able to close above $85,000, it will not create a bearish hammer candlestick pattern as we have had here. It will turn the $85,000 back into a support, and it will increase the probabilities that indeed this fifth wave was a truncation. We have started the B wave of our zigzag, which is basically this one, right? And this B wave is also a zigzag itself, and basically it subdivides itself into 3 waves, and this first wave is basically started right here already, and as we have been updating and explaining in the previous videos, it is forming in a leading diagonal mode, and this will be just a slight deviation below the previous low right here, and everything will be okay. But for that we need to have the weekly confirmation, okay? And the second confirmation will be a daily candle that is closing in 7 hours, ladies and gentlemen, and it also needs to close above $85,000. Then this will be just a wick, right? Something like this, and it will be all okay. We are in a highly leveraged market, and these kind of deviations happen. If this gonna end up like that, just as a wick out lower, there is gonna be a higher probability that we will retest that $93,000 and then go towards $44,000, and that will mean that we are right now in the B wave corrective mode already, and after it's finished we will continue towards $44,000. all right, so right now either way I do believe that we will have some kind of a pullback, okay? So it depends on if we will have a pullback towards $87,000 or towards $93,000. So let's understand by looking into our medium time frame chart what is more probable. All right, so what can we see right here is the 5 subwaves A, B, C, D, E that are needed for forming a contracting triangle. This is a descending one on the chart we are seeing, an ascending one, but the rules are the same, okay? Each subwave is made out of a corrective mode pattern, and once the E wave, final E wave is formed, we continue in the same direction in which this triangle worked as a counter trend. So as you know, we are in a bear trend, right? And this contracting triangle, possible contracting triangle, we cannot say that for sure just yet, is in counter of the main trend, of the higher degree main trend, right? If we take a look at oscillators on our medium time frame chart, we can see that we are forming exaggerated bullish divergence on MACD histogram. The price action is making lower low, but the momentum is decreasing, is weakening. That means that the bears are getting weaker. On RSI we can see another divergence. Together with that, we are in an oversold levels, ladies and gentlemen. So as you can see, the price action is making so far a higher low. However, the RSI indicator is making lower low. This is again a beautiful example of a bullish divergence. If you are in our MCP free university that you can find on our website marketparadise.com, you know exactly what I'm talking about, the dynamics of it. And so far the divergences show us that the bears are getting weaker, and there might be a push higher very soon, okay? And now it depends. Are we about to retest the contracting triangle and then continue to go lower, or we will actually continue towards $93,000? That really depends on the closures from daily and weekly time frame, how this level will react. And also if we take a look at our low time frame analysis, where we can see this expanding triangle, okay, ladies and gentlemen. So the expanding triangle is actually a possible fourth wave of our leading diagonal, okay? So this is first, second, third and fourth wave. As I said, this might be just a deviation, and this might be the flat corrective pattern, and then we will just continue higher as showcased in the previous videos towards that $93,000. This might still work because if you take a look at the descending trend line, we are having a beautiful retest, and it really might be just an expanded flat triangle, ladies and gentlemen, but we need to have a confirmations to say that for sure. On low time frame, what supports an upcoming price action and pump higher towards either 87 or 91 $93,000 is also the decrease in bearish momentum. As you can see, another bearish divergence on MACD histogram. If we take a look at some insider data, we can see that the social index is extremely low, right? And we are actually completing the cycle. As you know from the previous videos, we have been communicating together about the social index cycles that you can find on our website mycryptoparadise.com, and as you can see, we are in the red numbers. The social index is extremely low, and that really suggests that we are about to pump right now from the support we are at. Also, if we take a look at the current fear and greed index, we are at the points 20, okay, very low. We have always bottomed from this level, so that supports the possible reversal. Also, as you can see from the previous videos, you remember that we have been talking about the liquidation right here at around $82,000. We have taken that out. As you can see, it's absolutely gone, and right now the liquidity is forming above us, okay? There is really very small liquidity below us, so for the market makers it is not that profitable to push the prices lower right now. If I take a look at 48 hours and also 24-hour time frame, as you can see on the liquidity heat map, we are having a beautiful bright colors exactly at that $85,000 level, ladies and gentlemen. So I believe we will go at least there for a retest, and from there then we will be able to analyze with a higher precision what's gonna happen next. Is it just going to be the retest of the contracting triangle, or we can push above that $85,000, turn it into a support and continue higher, supporting the price action of the expanded flat pattern, etc. It will really depend on the price action we will be unfolding at during the push higher. Right now, what also supports the push higher is our ultra low time frame count. As you can see, after a possible fifth truncated wave, we have started an ABC correction. C, this is the expanded flat, okay? If you are in our website learning in MCP Free University, you know exactly what I'm talking about. Expanded flat corrective pattern has the C wave in an impulse mode, and often it's extended and goes way below the A wave, okay? So that we have right now, and as you can see, we are finishing the impulse because we have been able to calculate the subwaves 1, 2, 3, 4, 5, okay? So right now it seems like we are creating a new trend, but we cannot go below this, okay? We have retested the trend line that we have been forming since $87,000. We are at that powerful support right here. The odds that we are going to go higher, also because the USDT dominance being at resistance, are quite high right now. So ladies and gentlemen, I will be updating the price action for you again on Tuesday. As you know, I always record videos on Tuesday, Thursday and Saturday. Make sure that you are trading with a great strategy, with a great tactics, prioritize long-term profitability, and I will see you again on Tuesday. Cheers.